Good afternoon again. So welcome back to the second session. It's going to be an interactive one. So feel free, ask whatever you want to ask about the markets. We're here to answer to each and every of your questions. So don't be left out. It's a talkative session. So yeah, welcome back to the session. Yes.
So guys, now this is second episode or the second session of Trader Circuit 254. Again, we're here to communicate, to discuss about the aspect of Rpopfirm and trading real account or the broker account. So the question is, sometimes people tend to ask, like, is it much better to trade on a Rpopfirm or to trade on a broker account? Basically, Rpopfirm, for those who are new, is you're trading from a firm whereby you're funded. You're supposed to pass through challenges or tests. Basically, it's usually phase 1, phase 2. But again, it's kind of tough to follow because there's some rules, there's some sets that you really have to qualify before you get to a funded stage. That's when I will be trading to withdraw. Now, you see, like, there's more of rules. And again, compared to trading your own account, which is the broker account, then there's no rules and there's no much restrictions. So you can do whatever that you want and gain or lose that you can be able, whatever that you can be able to lose. At the same time, psychologically, there are two different trading styles in this particular aspect of Rpopfirm and broker accounts. So the question is it very easier and very simple to trade on a Rpopfirm, or is it very tough to trade on a Rpopfirm as compared to a broker account? So I'll point back to Forbes Empire, because he's one of the prop trader, and maybe from his experience point of view, which one do you think, like, it's more better as compared to another?
Yes, Rpopfirm trading.
Yes.
On my end, this is what happened. Not every trader, you are a trader, you've done your education parts and you want to start trading. Rpopfirms, they're affordable. That's the first thing. They're affordable. Another thing, it's not easy to trade Rpopfirms. There are set rules. So this is how you actually test your psychology part in trading those accounts. So the moment you violate a rule in a Rpopfirm account, your account is gone. And what does it mean? The money you used to purchase that specific account, it's no longer yours. So on my end, trading Rpopfirms are a bit tough. So for a beginner, for example, you want to start trading on a Rpopfirm accounts, I normally use Rpopfirms to scale my capital. So let's take a scenario. I'm having a $35 account. I input in my MT5, I want to trade gold. What move will it take for that specific movement in a specific candle to wipe out the $35 that I'm having some few pips into the market? So I did this is what I did. The first Rpopfirm I got, it was from Funded Next, actually, the 5K challenge. Below it, another $35 again, below it. But it's a moment, like, you have to master the mistakes you are doing so that you can get funded. So Rpopfirms is good for scaling up your capital, but it's not as easy as a trading real account. But there's more experienced farm trader, Marvin, because I've been passing up to 200K.
Gives a trader the toughest environment, but again, if you can manage to survive, pass phase 1, phase 2, sustain live account even 6 months, then bro, you are qualified to be a pro. And Rpopfirm, as much as sometimes, I used to say, is a waste of time, but again, at some point, it sharpens you. You know that their trading objective or the rules are very strict. Someone telling you that maximum daily drawdown is 3%, and of course, if you can make a loss of more than 2%, then it means it's also affecting your daily, your overall drawdown. So psychologically, you start losing that account. That's why, from experience, the moment you start a program with a loss, that's it. Psychologically, you're losing that account. And it gets to a point you feel like, no, let me just bring it back, or if it goes, let it go. So I can say, first of all, before you start program, trade your own account even 6 months to confirm that you are consistent profitable. After confirming that you are consistent profitable, buy a program. Don't go for big because you need money. You can even start with $10,000 program account. Trade that account, and if it means to acquire a bigger account, if the program that you're trading is doesn't have the scaling program, use the profit to buy another account. So it is important to grow gradually than being driven by the need of money, because by the end of the day, we need money. It might not be urgently, but everybody needs money. But if you put that pressure in the market, you'll end up losing money. So from my own experience, I used to think that I need big account for me to make money. I started FTMO. I didn't pass my first 4 challenges. I had like one that managed to go to live. But again, I did a silly mistake. The need of money, now that I'm in a live account with FTMO, so the need of money made me mess up with that account. Actually, I started making money with the 5th one, because after losing the 4th one, I called myself for a meeting. Then I felt like I'm losing. Time is going, I'm not making anything. I had lost my trading account like few months, like around 5 months ago. That was 2022. So actually, the reason why I'm here today is the discipline that I applied around 2022, end of 2022, into trading from FTMO, making some good capital. Then I stopped trading Profam for my own money. So the reason why trading your own money, you're more likely to make more money when you're trading your own money, is if today you decide to risk 20%, let's say you have $5,000 or even $2,000. If you decide to risk 20% for like time is 10 or time is 5 of what you're losing, bro, that's good money. But Profam can allow you to go beyond 5% daily drawdown. You see? So it is easier to make it big from your own money, even if it's small, than the Profam. But again, it is also important for a trader to pass through the Profam challenge, because it creates consistency, it creates discipline. So by the time you're getting back to your own trading, actually the system, the consistency, or the entire system that comes with discipline, consistency, it shall be instilled into your nerves. And that is where you'll start experiencing success. Again, apart from applying the concept, the trading objective of Profam into your own trading and the entire trading life, you must also be a risk taker, an aggressive trader.
So it's confirmed that you see, like most newbies think like, I better buy an account which is a Profam account than to have a life account like the broker accounts. So which truly means like most people in their minds think like Profam is what they will need to make money or to be profitable. At the end of the day, you'll just realize like the pro-farm doesn't make you profitable, right? You just have to be profitable first. Before you think of maybe having a huge account of maybe 50K, 100K, then it means like you must be profitable by your own, because you don't need a pro-farm to be profitable. Maybe you've been depositing $200 and you say like, this is a small account, I can't trade with it. But in reality, you are not having a strategy that is really making sense. And in as much as you don't have a strategy, trust me, you will still blow the entire pro-farm of $100,000 or even $200,000. So it doesn't make you profitable, or you don't need it to be profitable at the end of the day. You first must be profitable. Then at least now in the long run or on the way, you just choose to scale up. That's why there's that concept of scaling up capital from the pro-farm, which still means like you need to be automatically profitable before you go to the pro-farm challenges. Yeah.
My take on pro-farms, I think we should have our own session on pro-farms and their experiences. The topic is wide and crazy. But my few remarks on pro-farms. If you are not a disciplined trader, see very good pro-farms. If you are not a disciplined trader, because those rules, in as much as they sound easy, they are designed to make you fail. So if you are not disciplined and you've not backtested the strategy, don't waste your time looking for pro-farms. Yeah, it's tricky and it's tough. And surprisingly, it comes with hidden rules.
Yeah.
Like an example of 5% I don't experience.
Yeah.
Once you're funded, you're gonna 3 minutes wake focus. Whatever. You try to be like sell time ya draw. Atakusumbua. That's from my own experience on 5%. But these are rules example.
Yeah.
So you need to understand the rules, the dynamics, like recently fundamentals. Nowadays you cannot hold trades over the weekend.
Yeah.
But initially you could have your trades as long as that. And the FTMO, it's going that direction also.
Yeah, you can't hold that trade even during markets in between.
And also you need to understand all the rules, the consistency rules, a lot of things. It's a way to. But if you're not a disciplined trader, it's very good pro-farm. Yeah.
Great.
So now we can have an open session. So I don't know. We start from this end. Yeah. So then take like at most 1 minute to respond to that question because of time.
Okay, my name is Joseph. I have a question. I've been in the market for 1 year. I have this question: what does it take to be a disciplined trader? What does it mean to be a disciplined trader?
Okay, let me start by answering that. I think for you to make money in the market, you must be disciplined and you must be indisciplined at the same time. Know when to be disciplined and know when to be indisciplined. Know what makes you to be indisciplined in the market at the same time. Okay, what I mean is that, for example, you're trading money that you don't want to lose. Of course, as much as we say you invest money that you're willing to lose, but nobody wants to mark time in losing every day. So trading an account conservatively until it grows to a significant account, that's an achievement and it needs discipline. The moment you have you have reached to the, let's say, minimum threshold capital that you needed, start using capital to be in discipline. For example, we do have challenges of $100 to 1,000 or 200 to 1,000. Take part of the profit, be in discipline by entering full margin. Make 1,000 or make 2,000. But in the day, if it goes, it's still an amount that you are ready to trade in an indisciplined way to make more. But again, on that side, you have your main account. you can be indisciplined in your main account. So in other words, sometimes you apply discipline, sometimes you become indisciplined. And actually, most of the time, the indisciplined part attracts more money. Yeah. Like for example, you have $500 account, you've made like another $500 account trading conservatively for 2 weeks or 3 weeks. It doesn't cost anything for you to take $200 prepared. Of course, you must have a target or entry technique on how you're going to enter that market. Hit the target, close the market. Add onto your, what do you call, initial capital. Wait for another day. Yeah.
Good evening. My name is Edgar. Just trying to join into the business. So, according to, is it important to ujue strategy zote, all the strategies, or you just focus on one strategy so that to increase your
Okay, on strategy, it depends with your mentor. For example, you've come here today and our main strategy is SMC. I'm assuming that all of us are trading the SMC way. Forbes, SMC?
Price action.
Price action?
Structure-related structures.
Okay. SMC? Anyway, cameraman. Karada. Anyway, so now it's like this, eh? It depends with the person who introduces you into the market. So you might be introduced by someone who uses indicators. So what's more important is for you to understand the basic. To understand the dynamic of the market, then come up with your best approach. You see, like for example, I have guys here, we've learned SMC with them. But at the end, you realize that as much as they have SMC concepts as as a foundation, but they have their own technique on how to enter the market. You see? So, for example, Forbes, tumefanya naye SMC, but at the end, he added something on top of that SMC. So, it all depends with someone who introduces you to the market, your understanding of the whole thing, the whole idea of Forex trading, your personal experience as well. Yeah, so otherwise any strategy can make money, but also using one strategy is the best. But before you identify the strategy, you'll take a while. That's why you are told for you to become consistent profitable in the Forex market, you need roughly a year, let's say a minimum of 1 year, maximum of, no maximum actually, you can even take forever, even 5 years without becoming profitable.
Okay, my name is Samson. I have been in the market for like 2 years and I'm not yet profitable yet. So my question is on the Rpopfirm. Don't you think trading Rpopfirm can make someone to be disciplined?
Before you say that, you said that you have been in the market for 2 years, right? Mm-hmm. And you're not profitable. Mm-hmm. So there are some key reasons that you yourself, with the understanding of the market, you know where the problem is, right? Yeah. You can point out these and these and this is the problem, and this is what is hindering me from making money. Yes. Tell us.
The reason as to why I'm not yet profitable.
Yes.
I guess mine is greed.
Greedy.
As in the controlling myself not to enter the market after maybe I have made a good amount of money. Like yesterday I made like $2,000 and then I lost it all. Mm-hmm. So I just guess it's greed.
Yeah, actually it's a very common behavior in the market. Sometimes when the market starts paying you, then it might take hits very easily. For example, the other day I had a challenge of 10,000. I really wanted to hit 10,000, but I ended up closing at 8,000. Reason? Because I knew if I push to 10,000, there's high possibilities that I'm going to lose even half of it. So I kept it for another day. So there's a scenario. Anytime you make profit, there's also the other day broker was complaining that too many withdrawal requests. Why? Because I had several setups, made money in different setups, and every setup, every time I make money, I withdraw. Better the money goes to my bank account, and maybe I mess up with the initial capital, I still fund and remain with the money. You see? So that's the secret. Once you make money, withdraw. So it is better you pull part of the money, part of the profit back to the account than leaving the entire money. It looks so enticing, especially if you have been working towards getting a significant trading amount and maybe you've achieved that. So better work for it, withdraw. Work for it, withdraw. I'll advise you to choose seeing the money in the bank account than the broker's portal. Okay, there's a day I had a very nice setup on Gole, and part of the money, actually better part of the money, wasn't in the broker's portal. And trying to fund back my Binance. Okay, too bad that I changed the password of my Binance. And once you change the password, it gives you like 24 hours before you do another transaction. Any transaction in the account. But I really needed to get that money to the broker's portal so that I can trade. And I was in the mood of entering full margin. So seeing that market later, inamaanisha ningepoteza pesa. You see, so sometimes don't get excited to seeing a huge figure in the broker's portal. That's not your money, because chanseme shetani shetani anaingia, you lose that amount. That money. But in your situation, if you have a strategy, a working strategy, I'll advise you to go the proper way. So I'm sure you can be happy to lose many Profirm accounts. So definitely it will force you to be disciplined. Not because you want to make money in the Profirm, but because you want to adapt the trading objective of a Profirm. It automatically start creating discipline.
Alternatively, another easy way of achieving that is to get yourself a trading partner, trading buddy. Like we boys, utakwambia uliingia gold, tumia screenshot usani funga hiyo trade. Umefunga, tumia nione na toka hiyo. So you see here, person to keep you in check. Hata ule mso unamficha identified ya ule boys ule, then wanasema you need to keep, there are some things you need to keep secret, your income the next month. But if you get yourself a trading partner, and then go ahead, all the picture will look you ile bro angekwambia leo toa ile pesa. Sasa ungekuwa na $5,000 yako na bado kwenye ile account yako. Sasa unaleta hiyo pesa.
Kamera inafanya?
Okay, I am Kirui. I've been in the market for the last 1 year, and I have 2 questions. Number 1 is you find a scenario whereby the market is choppy, but it is making some slight moves. So how do you advise in that scenario? And then number 2, sometimes when you analyze the market, there is a setups that looks perfect, but maybe your mind is telling you maybe it cannot make it. So which factors do you consider to disqualify that setup?
Okay, one, when the market is choppy, more likely there's consolidation, so it means illiquid. The market is illiquid. And most of the time is when, for example, the market is expecting a major news, like for example NFP or CPI or FOMC, or sometimes there is bank holiday. You see, good example, better part of last week, around Monday to Wednesday, we had a choppy market structure. Or in other words, we had some random movements. Choppiness means what? Choppiness means, okay, choppiness, most of the time choppiness is a market that has been created by illiquidity. And there is that in actual prices given. So sometimes it can even trigger you a sell without the market really getting to that point, or taking you out, or achieving your TP without the market getting to that price. At the same time, you realize that the spread is always wide, so it is good to chill, wait until the market start moving, because we take advantage of the volume or the liquidity the liquidity is from big players like financial institutions, banks, hedge funds, insurance companies, and many other players. So choppiness is not a market for retail traders. Wait until the market cools down for you to take a trade. Traders, how do you handle choppy market?
Keep off.
Keeping off?
Keep off.
Okay.
Yeah,
So,
like not 3 days are profitable days. Yeah.
a perfect setup, you're in between entering and ignoring. Which one do you do? Do you ignore or do you enter?
Sometimes I normally ignore.
Most of the time? Most of the time you ignore.
Yeah.
You've learned the system, the bitter way.
Again,
Yeah.
bro, I think
So,
it's better you realize that you don't have to trade every day. That's why in the beginning, the first session, there's that point whereby I had someone mention about taking 3 or 2 trades a week. You see that? So it meant that sometimes there'll be times like that, which you're talking about, whereby there'll be no clear direction. You don't see a clear entry. There's spikes on top, down. So at the same time, you learn like you better stay away, which I believe like that's the point which has been mentioned. So in short, learn that you don't have to be trading every other time, like every day. If you can get maybe 2 trades in a week, 3 trades in a week, well and good. You lose 1, you win 2, still great. Now, the point of you mentioned about, you've asked about a day when you have a setup looking very nice, like very clear, but you fear. So basically that's a psychological problem, and you feel like you are not determined to enter that particular market. So in short, that is fear, right? That is fear, because at the end of the day, you have a setup, you have a strategy, but you're fearing. Maybe the fear might have come from the previous loss. Maybe you had the previous setup and it was a loser trade, right? So if you had maybe the selling setup and you lost, automatically in the next setup, you will feel like the last time I placed this kind of a trade, I lost maybe $200, $500. Then what next? I might still place this one and it loses. So bro, the only thing you need is determination to take that trade. And as well, maybe the best guidance that you might still need is to have a group of traders, or maybe a community of traders, right? At least when you have a common thing, let's assume you're in Bitam traders, Apex traders, or any other community. So you'll think like when you're very clear on what you are targeting, you're having a common setup, you're thinking of, everyone is thinking of selling on that market, then automatically you want to be left out. And you will say like, if people are selling from this point and I was supposed to sell, automatically you'll still be able to sell, because you have courage from all of you. the entire community is having the same bias, you're supposed to sell, for instance. So it will mean like you'll be able to sell, and if that trade will reward, automatically you'll have gained some confidence. So the best way to gain that is to build or to join maybe a community of traders, then from there gain your confidence in particular market. See.
Bro, to cut you short, there's this part of what do you call backtesting. Take a good time to backtest. So by the time you're coming back to identifying a nice setup based on the strategy that you've learned, usiwahi ogopa kuingia. Just calculate the amount of risk, get into the market, trade.
Backtesting.
Sometimes personal choices matter more than group choice.
Yeah, sure.
You've learned the system? Yes. You are smart, bro, to know if the system that I've been learning for the last 1 year is working or not. Why don't you trust yourself into analyzing the market using the same system, enter the market. And in the process, you will be making more loss than profit. Of course, there will be a problem. Go back to the drawing board. Where are you going wrong? You have all the information in the group that is actually supposed to make you profitable, right? So it's all about fear. Don't fear. You've learned the system well, you've mastered it, be confident. Analyze the chart, enter the market with a described risk. You see, like a risk that you can, something that you can say I'm risking $20 for 60 pips, something like that. If the $20 goes, then you are good. Because initially, you had a maximum threshold amount of money that you are risking in that particular trade. Yeah.
Hello everyone, my name is Eric, and my question is, I have been trying to research about risk management, but I'm not getting that clear definition of that risk. Mm-hmm. Can you help me understand more about it, the risk management?
Okay, risk management. When we say risk management from any perspective is, let me say, a technique that create a restriction to, for example, when you're losing to a certain amount, right? Something that you're comfortable with. That's why you say risk management, something that you can manage. I approach risk management in three perspectives. Risk protection, protecting against what? Loss. And risk protection comes with the psychology part, greedy, fear of missing out on opportunity, fear of incurring major loss. You see, not being confident, all under risk protection. Risk profile. Risk profile is whereby you understand very well the amount of money that you're trading with as your initial capital, right? Can you be able to calculate, what do you call it? Pips, number of pips? Can you?
Yes.
Value per pip? Amount of money you're risking per trade? Target? Risk to reward ratio? So those are core concept of risk profile. Should write down so that anytime you want to enter a trade, you refer to the core concept of risk profile. Lastly, managing a running trade, very important. Sometimes you see a blue, then you're like, maajabu, you close. In the fear of the market might come back. It's obvious, actually, the market always comes back to the entry. It depends with the zone. So if the zone started with a high momentum, be assured that that market might come back to fill what we call imbalance before it goes. So the third part, active trade management, is also very important. Use 3 techniques: stop loss, break even, and TP. And sometimes taking partial profit by instantly, closing trades instantly. Yeah. There's a summary of the document that I created for risk management techniques. Umekuja na nani?
Steven Derito. Kuna kijana anaitwa Steven.
I guess he's in our community. You'll take my number. I'll send you that PDF format. And actually, I did a video last year, 2024, about risk management techniques. You can as well watch that video to assist you. So, bro.
Yes.
Vipi?
Niko salama sana. Me, I don't have a question because I'm one person who learns from my mistakes. So maybe you help us identify the best session for trading. Because you find out that the New York session is so volatile. Yeah.
Funny thing, the volatile, we need that volatility, market movement for us to make money, you know? And we take advantage of volume, in other words. We have 4 sessions in the market: Sydney session, Tokyo session, London session, and New York session. So volume in the market is based on the size of the economy. For example, the New York session, you can, USA is a superpower economy. It has all the volume. It comes with almost the entire volume that we need the Forex market. That's why when they are actually off business, the markets inaanza kufanya slow down. So it might not all about the session, because sometimes you have a nice setup. Let's say GBP USD, you're trading GBP USD and your supply price is at 1.35. You see, so you're supposed to place your order at 1.35. So if it's a valid zone, it will hold. And if the session, let's say New York sessions comes in when you're already in, then the market obeys your buyers, that is a sell. That is now the time when the market will pay you well, because there's that movement covering good number of pips. So I guess staying at the zone of interest is very, very important, especially when it comes to trading different sessions. So you might not even consider the session that you're trading in, you see. But when it comes to when the market is moving or paying you well, is during London session and New York session, especially when you're trading currencies. But gold, na tunakonga sana ni usiku tukitafuta. Yes. Yeah. So guys, sorry, we just have to make it short. I'm so happy for your attendance. It wasn't meant to be a big thing, but at least the content that we have created today can help someone, and it will be posted in our YouTube channel. I'll share with you guys the link. Again, I would like to appreciate the panelists. Maybe watukumbushe majina yao.
Ronald, founder of Forex traders.
I'm Forbes. Forbes Empire.
So I'm Dismas, the founder of Apex Traders Hub.
And here I'm Marvin, founder of Bitam Traders. And the session or the program is called Traders Circuit 254. So today I've been in Nakuru. We've interacted with a few traders and beginners as well. So we had a discussion here and there. The aim is to bring real Forex education into the Kenyan market. Until next time, see you in Eldoret.